Among this week's most watched items, we see US non-farm payrolls with a renounced heavy effect on the US dollar, the bond market and the stock market. Joining me to discuss this and much more is Justin Irving from NGDP Advisers. So Justin, Turkey's AK party swept to an unexpected victory in elections on Sunday. Erdogan said the outcome was a vote for stability. The Turkish lira and the Istanbul stock market has risen sharply since this news. Can we start to see a more stable lira in the near future?
In the near future, as in the next 1 or 2 months, I think so. I wouldn't make too much of the election in terms of a longer-term forecast, say a year out. Really, if you look at the Turkish stock market, what this has done is it's just made up for a fall in share prices during the summer. And I just don't expect things to change a whole lot in Turkey, especially with the situation in Syria, which could complicate things in an unpredictable way.
When looking at the UK, Stephen Boston from ICAEW stated after a post-election bounce, confidence has fallen further. The political honeymoon is over. Business confidence has fallen in the UK. Are you expecting some much-needed injection of confidence from UK data released this week?
When I look this up, I see we have house prices, monetary policy, trade and industrial production this week. Is the primary interest is monetary policy release, though. Yeah, I mean they're definitely not going to raise rates this week. There's just no space to increase rates right now. Inflation is essentially around zero, and the economy seems to be fairly, I wouldn't say weak, but it's hardly strong. The only really strong point seems to be increases in house prices, but again, that's sort of a cyclical phenomenon and not something that the Bank of England is going to overreact to. So I would definitely not expect anything interesting to happen in the monetary policy minutes this week.
And Justin, looking ahead to Friday, US NFP is released. The last 2 months have seen figures that are well below forecast. This month, American payrolls are due to increase to around 185,000. How crucial is this data when looking ahead to the much-anticipated Fed rate hike?
It's fairly important. It's a noisy indicator, the non-farm payroll release, but the Fed does look at it and markets do move on it. So, I mean, I would say that if it came in, quite strong, like say really surprised people, 250 or 275, which I wouldn't completely be shocked by, then it would increase the odds of a rate hike the next meeting, the next FOMC meeting. But I still don't think it would be enough to put the odds in favor of a rate hike if it came in extremely strong. I would say that the thing to look out for this week, especially the non-farm payroll release on Friday, that's the one to watch.
Well, Justin, thank you for your insights today. As Justin said, the NFPs are definitely one to watch. So for updates on this and much more throughout the week, keep clicking back to Dukascopy TV.